All right, good morning. Uh, I want to welcome you all to today's morning market week. Please, I'm being heard. Just send a message indicating that you can hear me. Just say yes. If you can hear me, please just type yes. All right, so thank you very much. So my name is Don Deyo. I'll be taking you on today's morning market review. Now, as usual, we will start off with the fundamental analysis. Look at some of the fundamental events that we have for today. And then after that, we'll go into technical analysis. So let me share my screen so that you can see what I'm looking at. I'll be using the Forex Factory fundamental analysis. All right, so I want to believe you can see my screen. All right, so for today is 19th of March. So we have some high impact news slated for today. So what we see a lot of high impact news for today. So the one we are expecting is the one for 1:30 p.m. That's on card. On the Canadian dollar, we are expecting the CPI and then the inflation rate on the Canadian dollar by 1:30, which means for today, the currencies that are likely to move massively, the any pair that has the Canadian dollar alongside with it. I am using forexfactory.com, and you can see where we have the news, the red impact, the high impact news. That is this particular box that you see in red. These are the high impact news. So if we look at the numbers, we are seeing that if the focus is actually 0.6, that is for the CPI month on month, the focus is 0.6, and then we are expecting the previous was 0.0. So what this simply means is that we are expecting an actual to be released by that time. And if this actual turns out to be higher than the focus, then the Canadian dollar will appreciate massively. Massive movement or massive appreciation in the card. But if it falls below the forecast, then we will notice that the Canadian dollar will shift in price. So for today's analysis, one of the currency pairs that will be played today would be the US card. That is the USD to Canadian dollar. That's one of the events we want to look out for. And earlier today, that's around 4:30 a.m., there was a news on JPY. For the first time in almost 20 years, the BOJ has increased their interest rate from negative rate to a positive rate. They have increased from minus 0.1 plus 0.1, which also means that for this period, any currency with the Japanese yen, very well. So let's now go to the chart and see how this would affect our trading for today. So have this at the back of your mind that for today, the major event that we have today is Canadian dollar, and then two medium impact news on the US dollar. Canadian dollar should be the pair in focus. Okay. All right, so now let me go to my chart, and then we'll look at some of the currency pairs or instruments that we can actually engage in for. So I'll be sharing my screen now. So give me a few minutes. All right, so I want to believe you can see my screen. All right, so usually we normally start with the DXY. Let me pull up the chart of the dollar index. It's very important that we network connection. So I was waiting for the network to load. All right, so this is what we have for the dollar index. We noticed the massive movement on the dollar last week. That is what we see this to the upside. Now notice that as the dollar has moved up, has come into an area of resistance. So you can see the line I just marked. It has come into an area of resistance where we should expect a pause. We should expect a pause in the movement to the upside. So fundamentally, I think the dollar is bullish. Dollar is strong. So we see the movement up. Now, this movement up was as a result of the CPI last week, which came out positive for the dollar, and some other fundamental, some high impact news that came out still positive for the United States dollar. So we see that the market has pushed all the way up. Now, because I'm a Fibonacci person, I will usually want to see how much this placement is. I have just drawn my Fibonacci from the high, is this high, that is last week's high price, this week's high, and then extended it to this low. So normally, based on the rule of the field, we expect that a market that has expanded this much have a kind of retracement. So the retracement we are expecting should end at around 61.8%, which means our 61.8% is exactly at this region. Now look at this region where I am hovering my mouse. So for the dollar index, we would expect a push to this area before we can see a potential drop to the downside. So if the dollar index, the dollar gets up to this area, because this area by itself, you can see from the past, look at my cursor at this side, you notice that this is an area of support turned resistance. So at this region, there were supports, but when the market breaks through, it now becomes a very solid resistance. We expect that there should be a pulse in the dollar at this region. Now, even if the dollar will continue rising, we would expect a form of retracement, a kind of retracement. And that retracement, if at all it doesn't reverse from there, then we should be expecting a retracement to at least area before a continuation to the upside. But for now, I am anticipating that the dollar should pause at this point. Now take note that the high impact news on the dollar tomorrow and next. We don't have much high impact news on the dollar today, but there's a tendency that the news on card would also push the dollar. For this being said, now I'm looking at H4. So my current time frame here is on the H4. So if this is happening on the H4, now let's quickly just jump down to H1. So you can see that on the H1, we already have a bullish momentum, market going all the way up. So like I said earlier, we are expecting the market or the dollar to get all the way up to this run, or we can see potential drop in price. Now this drop, like I said, could be a retracement or a reversal, or at least get a pullback, each move the upside. Having said that, let's now quickly look at the Euro USD, and then what do we expect on the Euro USD? So on Euro USD, if we look at the higher time frame, this is one. So on D1, we can see a push to the downside on D1. So we can see a push to the downside on D1, which means for a couple of days now, the Euro US dollar has been, and that is in line with what we see on the dollar index. So the same principle we just applied on the dollar index, if we are to apply it here, I draw my fib. Now take note of how I'm drawing the fib. From the low, look at it move up. Now before, look at this massive move to the up. There was a retracement of this move. So this is what I mean. This instrument, which is the Euro USD, it moved this much to the upside. And then there was a slight retracement to around 23% of this massive move. And then the other leg of the movement which we are experiencing now is one you see right here. This is another movement which we are expecting. So now we have seen a retracement of this move also. So like we said earlier, we should see the market retrace to around 61.8%, which is exactly where we are now. We are exactly at that region of 61.8%. So if I draw my region, then I will have something that looks like this, which means from this area, I am anticipating that the dollar index should, the Euro USD should appreciate in value. Remember that what we saw on the index is just very small. So there might be a small push to this side. This is just a few, not so much. So if that is the case, then we would likely see the euro dollar appreciate from where we are now. So from where we are, I will be more bullish on Euro USD than bearish, even though we have seen this retracement to the downside. What I would normally do is to take a position from where we are now, which is a buy trade, and a stop loss just below this particular low. So I'll be placing a stop loss below this low, and then an entry at this point. So for Euro USD, I will be going in for buy. So Euro USD would be a buy trade. What I will quickly do now is I'll place a buy. So I'll be entering with 0.1 at this particular region where we are. So I'm placing a buy trade on a Euro USD current market price. So I have placed my buy, and then I'll be setting my stop loss and my take profit. My stop loss is just above, it's just below. Let me make this much clearer. So I'll be placing my stop loss just below this low. So look at the position of my stop loss. It is below my 79% retracement. So my stop loss is at 1.06280. 1.06280. So a buy trade at the current market price and the stop loss at 1.0680. And then a TP, a take profit, will be at the high. That is this current swing high which you are experiencing, you're seeing here. So I'm placing my TP high. I am currently on a H1 chart. So this is H1. I'm looking at H1 Euro USD. And I have placed a buy trade at the current market price with the stop loss at around 1.06280 and the take profit at the swing high. Look at the swing high. That swing high is around 1.0968. 1.0980. So this is my analysis for Euro USD. Okay. So like I said earlier, I'm anticipating a continuation to the upside. Now, if there's a move to the downside, we might just experience a small move to the downside before a push, to the upside. Now, but if this doesn't happen, then there's no need to worry. We have a very small, a tight stop loss just at this region. Now, my stop loss at this point is so my stop loss is just at 1.06280. And then my TP is all the way up this way. All right, so the next instrument we want to look at will be now, just as we have done on the Euro USD, we should also expect a similar thing on the Pound USD. The pound USD should give us something similar. It's pound USD. But it moves in sync with Euro US, although not exactly the same, but their movements are correlated. So we should expect a similar thing on the pound USD. But you notice that on the pound USD, we have pushed lower more than we did on the Euro USD. So we are going down much at a much higher pace than on the what we saw on the Euro USD. So for the pound USD, I would want to wait a little bit before I go in for any entry. But a buy is also in the sale at the current market. But it would be best to observe the market for a while. So let's now look at another currency pair. Let me just look at the chart and see. Let me just quickly look at the charts. All right, so someone is saying he can't see my screen. Can you see my screen? Please just indicate you can see my screen. Yes, all right. So someone asked a question that that the news on the JPY is positive, but the currency is weak. Why is that so? Yes. So the news on the JPY is positive. That is very true. But take note that for many years, the BOJ has kept their interest rate at a negative percentage. So it has always been. And for the first time in many years, they have just increased it to 0. Just at 0. It's not even 1. It's 0. So with that being said, it doesn't really do much for the currency pair. Assuming it was increased to possibly maybe 1 or so, that would have been a lot. But it doesn't really, it was already anticipated. Take note that that value, which it was increased to, is not really positive. If you look at the calendar as anticipated, which means the number that came out. So I'm answering, please, I'm responding to the question on the meeting chat. Someone was asking, or someone is asking, the news on JPY is positive, but the currency is weak. Take note that the news is actually in line, the number actually came out in line with expectation. The expectation was that there will be an increment to 0. And that was exactly what happened. So with that expectation, you should not expect any much positive effect for that particular currency pair. It's just like when someone meets up with your expectation, if there's something you expect from an individual and the person, is able to meet up with you, are usually not surprised because you already planned ahead of time that. But there is going to be a problem if the person does not meet up with your expectation. Then you'll be disappointed. Now, if the person exceeds your expectation, then you are overjoyed. So whenever the market exceeds the expectation, then you notice that there will be massive movement. So assuming that number came out and it was higher than expected, then you'll see appreciation in the Japanese yen. But because, the number was already anticipated. Now, this particular interest rate increase has already been in speculation for the past 3 weeks. People have been talking about it, making commentaries about it. So everyone is already prepared for that. There was no much move, in the positive direction of the JPY. So the news did not come out positive. It came out as expected. That is what you should have in mind. I don't know if, please, the person that asked this question, that is I'm only seeing your phone model. The person that asked this question, is it clear? Just indicate if you're clear on the point I have just made. All right, so please, can someone suggest which of the instruments you would like us to go into? All right, so I'm seeing USD JPY. So someone is saying we should look at USD JPY. So let's quickly look at the USD JPY. All right, so USD JPY and gold. So let's look at the USD JPY. So this is USD JPY. So normally when I do my analysis on currencies, I prefer to start from a much higher time frame and then go down to a lower time frame. Usually I start with the D1 because I want to see the overall picture what the market is actually doing. So I'm starting with the D1. I want to see what the market has been doing. So you notice that on USD JPY, we have seen a continuous push to the downside on different days. So for the past weeks, so move to the downside. And then when we bottom out at this point, we start pushing the back up. Take note that this area is an area of demand. So if I draw my box like this, you notice how we have moved into this area and then we are pushing back up. So with a push up, how far can we go? And go as far as this region that you see up here. So there's a tendency, a high tendency that we might run above this high, that is last month's high price. Remember, when we are on D1, we are looking at the month for the entire month of March. This is what the market has done, what we are seeing here. So there's a high tendency that we might push above last month's high price, which is this point I am going to mark as this point I am going to label as red. Let me just change this color. Let me just change this color to brown. So this point up here, we are likely going to push up above this particular point. So this point is the highest price, that is the high price from last month. So there's a high tendency that we might push up against that particular month. So if I drop down to my H4, can see the move that occurred. So this was the movement to the upside as a result of the news, on the Japanese end. But after this move, the market has paused. We should expect a retracement. So how low can we expect this retracement? I will want to go in for a buy on USD JPY, but I would prefer to see the market retrace to at least. So if I take my fee and measure for the movement for today, so this is the movement for today. So I will want to see the market retrace all the way down to around this region. Let me change this color so that. So I would like to see the market retrace all the way down to around this region. So for USD JPY, I would prefer to go in with a buy limit. I prefer to go in with a buy limit. So I want to see the market retrace down to around this region before we push up. So I want to place a buy limit at 149.710. The buy limit at 149.710. That would be, I'm going in, I will place a buy limit at, I'll be placing a buy limit at 149.710. So a buy limit at 149.710, and then the stop loss placed at, let me just set my stop loss and my take profit for that. Right, so my stop loss will be placed at, I'm placing my stop loss at 149.200. 149.200. And then my take profit placed at last month's high price. Remember, we are almost taking out that high. We are close to that high, which is also as a resistance. So I'll be placing it at 150.550. It's a buy limit. I'm going in with a buy limit. Remember, because of the push to the upside, I am currently anticipating a reversal. So I'm expecting that the market retraces, not a reversal, sorry, a retracement. So I'm expecting a retracement to around the region where you can see on the chart. I'm expecting a retracement to around this region. and then a stop loss just below that part at 1.9, 1.19, 149.200. So a retracement down here before we upside. What I'm anticipating. Went down. Or we push up. What I'm expecting here on the USD. All right, so the next instrument on my list there is gold. Let's quickly look at it. All right, so gold has been in a massive uptrend for a period of time. And then we see that we now have a kind of retracement. You know, the market has been pushing up for a very long period of time. Now, but notice that we have just broken structure. Now, this is a high, and this is our highest high. So, but notice that the market has been creating highs that are lower than this high. So I'm referring to this high here. So I'm referring to this particular high. So this is the high that our eyes should be on. And then this is the low that created that high. We are just looking at this particular low, the last low that created the most recent high that we are seeing on gold. That is this high. So you notice now that we have broken down, and then we have even closed below this particular low. This is the low that created the last highest high. So with this said, we can say that that gold has broken structure to the downside. There's a tendency that we might see a kind of a movement down. Now, take note that this movement down may not necessarily be a reversal of the trend. It could just be a retracement, because if we draw our fee from the beginning of this particular move up, if I drag the fee from the beginning of this move all the way down here, then it means that there's a tendency for gold to retrace all the way down to around this region, or we see it back to the upside. Now, how it moves down here will depend on the fundamentals that will be coming out. Have at the back of your mind that we have the FOMC meeting scheduled for, and then interest rate on the dollar this week. Some of this news might be what pushes the dollar, pushes gold down, and then possibly continuation to the upside. So even if we are seeing a break of structure to the upside, I am still bullish on gold. I am still bullish on gold. So for an intraday trader, we are looking at this, you know, at the short term, we might want to consider selling gold at the short term. I want to consider selling gold. Have it at the back of your mind that at the long run, we are completely bullish and completely bullish on gold. So if I'm to take a trade on this, I will be going in for. Now take note of what I've just done here. I've dragged my fee. Now look at this retracement. Look at this impulse, this expansion to the downside. Let me remove this so that it comes in. Now look at this expansion to the downside from this high all the way to this low. Take note of how gold has been moving. There's an expansion. Look at this high here all the way to this low, and then there's a retracement. And then an expansion again, and then a retracement. If you measure most of these expansions that gold is pulling up for each of these days, you notice that in each of these days, it retraces to almost around 61.8% of the Fibonacci. That is around this region. So this region it has retraced to, this region is a retracement of this entire move to the downside. And then if you use your fib again to measure this other expansion from this high all the way down to this low, you notice that this retracement up here is also all the way up to the Fibonacci retracement of 79. So look at the retracement of the fib all the way up to that point. And then this other move down, then we also see that the same thing is happening at around this point. So these are our 61.8. These are the areas we are seeing the retracement of gold. So what should we expect? Also know that each time this retracement occurs, it moves past the low. Look at this low, the low of each of these days. So there's a push below it. So there's a tendency that we might push below the low of yesterday. This is yesterday's low. So let me clear this chart of all these Fibonacci. Let me clear the chart of this. All right, so there's a high tendency that we might push down below the low of yesterday. This is yesterday's lowest price. This is the lowest price from yesterday. There's a possibility that we might push down below this particular price. So if that is this, then we want to sell. So I will want to wait for a sell on gold. But before I sell, remember that gold has the peak value for gold is very, very high. So I will want to see a retracement to around this area. I'll prefer to see gold retrace to around this region, or I'll go in by sell rather. So I want to see instrument retrace up here. And then from this point, I will be anticipating a drop in price. I want to believe you can see my screen, exactly what I will be anticipating. So I want to see a mild retracement to around this region, which is the region of 2159.72, to around this region, and then sell from that region. Better still, you can place a pending order. Remember, this is an area of strong resistance. This area was once support, now it has turned support around this region. This area can be termed as a support from a mild retracement. So if we retrace from that particular region, then I will be waiting for an entry at this part by a sell limit. Sell limit will be appropriate at this particular region. Let's see. So sell limits appropriate at this point, and then stop loss just at 2162.05. 2162.05. Sell limit at 2159.72. Sell limit 2159.72. Stop loss at 2162.05. That is what I am anticipating. Let me take some time to look at the charts and see what we have. All right, so I'm going through the questions on the charts. Let me quickly look at the questions. Please, I am new, please. Can we look at this one? All right, so someone is suggesting US 100. What do we have? US 100. All right, so I'm seeing more of US 100. So let's quickly look at US 100. So for gold, like I said earlier, I'll be bearish on gold then. So I am anticipating a up before we continue downside. Let me look at the US 100. All right, so this is US 100. Let me start with the D1. I think my chart is yet to load. All right, so we can see that the US 100 has actually, on the higher time frame, this is D1, we've actually been consolidating up here. So for this month, we are seeing more of consolidation S100. I hope this chart has moved. All right. So we are actually seeing, US 100 in a state of consolidation. Like I always tell people that for US 100, fair to always buy than sell. Yeah, because if you look at the longer trend of US 100, is up. US 100 is always, for a very long period of time, it has been in an uptrend. If I shrink this chart to W1 and then look at the move on US 100, so look at US 100. So notice that particular instrument has moved more upside than it has to the downside. These periods where you see movements to the downside are usually periods where we have crisis in the global economy. But besides this massive movement to the downside, the US 100 moves more to the upside than it does to the downside. So anybody who plays this particular instrument will be better off buying than selling. So on the daily, that is on the T1, we notice that we've been in a very huge, in the consolidation almost for the entirety of this month. This month of March, we've been in consolidation. But that notwithstanding, that does not mean that we cannot pick or look at entries. So this is H4. I'm currently looking at H4. So usually when the market is consolidating in this fashion, it's a bit challenging when the market is consolidating like this. So in this particular instance, you need to employ another strategy. That would be a kind of a breakout strategy, or wait for the market to always come as low as this point. So since we are just consolidating within this particular region, you need to now draw a zone. What we normally do is to draw a zone. So this is what we would do. We draw a zone at the height of our range and at the low of the range. So I have just drawn my zone up and down. So what this simply tells you is that I will want to buy more when the market is below here. So if the market falls below 50% of this range, I will want to buy. So where is 50%? You can just use your feet and measure from this low to the highest high. So if you measure from the low, the highest high, then your 50% would be, let me move this. All right, so I want to believe you can see this red line. So this red line is actually the midway of my range. That is, like we said, that US 100 is in a range. So you can see the massive range we are in. So what you do, what I would suggest is for us to buy, want to see US 100 fall below this range. If you fall below this 50%, which is the midpoint, buy. Means if we had done the same around here, we would have bought from around this region and the market goes up and then sell. So when we see this kind of range, best to scalp the currency or the instrument. Yes, but just like I said earlier, I would prefer to buy than to sell. For some persons who are aggressive, you can sell whenever the market is above this. So when the market gets to the half quarter of this, that is 1/4 of this, that is half of this half. What I mean is, let me just something like this. So if the market gets above somewhere like this, so above this point, you can always sell from here. And then below our midpoint, you can buy. So from where we are now on the US 100, based on this strategy, take note, I have changed the strategy. This strategy is just based on the fact that we notice we are in a range. The instrument is ranging. You look at the D1, if you look at D1, you notice that for the entirety of this month of March, we've been ranging on US 100. So trend following strategies may not work. Trend following strategies will not work on US 100. The kind of trading strategy that will work on US 100 as because of the current condition, be any trading strategy that requires you to scalp or breakout strategy. So any breakout strategy will work. Any scalping strategy will work, but trend following will not work. So based on what we have said so far, a sell on US 100 would be best at the current market price where we are. Because if you look at what it has done, notice that every time it goes up, this region sells to the downside. So there's a tendency that we might still push all the way down to around this region. So if there should be any entry on Euro and on a US 100, I would prefer to sell from where we are now, all the way down to around here. But take note of what I said earlier, that on US 100, more advisable to buy than to sell, which means you will be better off waiting for the market to drop to around this area before you buy. But for those that are aggressive, those that want to still go into the market, that's even if the market is still where we are now, you can go in, which means if you are selling, and to sell this, I will most likely wait for a mild retracement. A mild retracement, I mean, is I want to see markets retrace or the price retrace to around this region. Let me just change this color so that it does something much better. So I want to see the market at least a mild retracement to this area before I sell from this particular point. So the point I am referring to is I will want to see Control F. I want to see the market retrace to around 182, 1820, 18220. That is 18220, 1820, 1820.47, 182.47. So I want to see a retracement to that region of possibly a sell limit. You cannot wait for a retracement to that region. Then you can just place a sell limit at 18220.47. And then a stop loss would be just at 182, 180, 182.80 rather. 182.80. So this is my analysis of US 100. And then your TP should be below this or just at this swing low. Have a swing low around here. So your TP should be at that swing low. That swing low is 18000, 18300. That's your TP. 18300. 18300. That's the TP. So for US 100, that is what I will be expecting. So if I'm going in for a trade on US 100 at the current market condition, considering a sell, you're considering a sell because we are already at the half of the range. So we are already at the upper part of the range where we refer to as a premium, premium. And anytime the market is in premium, it's probably best to sell because we are always wanting to sell high and buy low. A sell from where we are best for this instrument as of this point in time. All right, so let me quickly go through the charts and see any questions. So please, if you have any question, feel free to drop your question. If you have any questions, please feel free to drop. Can someone? So someone is asking if Fibonacci is above Is it a buy or a sell? Now, Fibonacci cannot be above 50%. It is the market that will be above the Fibonacci number, not the Fibonacci above. The market would have to be above. So usually what happens is this: when you are in an uptrend, let's say for instance, I am measuring, let me just show you an example. I measure this movement. Look at this impulse move to the upside. Look at this impulse move to the upside. And then there's a retracement. The retracement is now below 50. So anytime we are below 50, that is the opportunity for you to buy in an uptrend. So when there's an impulse move to the upside, you should always expect a retracement. Now, the theory states that whenever the market retraces after an impulse move, you retrace to at least 61.8% of the impulse move, which means it's going to retrace below, it's going to retrace beyond 50% of that move. So it is the market that is the movement of the market that will determine whether you should be buying or selling. If this is an impulse move to the downside and you want to measure the retracement, remember that the essence of using a Fibonacci is just to measure the extent of retracement. It's like a ruler, just the same way you use your ruler. It doesn't tell you the direction of the trend. It doesn't show you anything else but how far the market can retrace or how far the market can extend. So a Fibonacci can be used also for expansion. If you want to measure how far the market will expand and how much the market will retrace. That's the essence of the Fibonacci, nothing more. It doesn't help us to get trend or to ascertain the trend. So I want to believe that that particular question has been answered. And then how would you know the indicator telling you to buy? All right, so Mr. Daniel Lifted is asking a question that how would we know the arrow indicator is telling you to buy or sell? Please make it much clearer. I don't know which of the indicators are you referring to? Which of the indicators are you referring to? All right, so I think we have 5 minutes to go. So please, if you have questions, if you still have questions based on what we have discussed so far, feel free to drop your questions. We have just 5 minutes left for this session over. And then if you miss any part of the lecture, you can always go on our YouTube page. The program, the class is recorded. You can always go back to watch recorded version on our YouTube. All right, so someone is saying Euro USD is on rest. Now, take note that we have a stop loss placed. We have a stop loss placed, and we'll wait until the market hits our stop loss. Remember that whenever you trade in the market, sometimes the market may fluctuate. So if you have been trading for a couple of times, you should know that when you place a trade, not all the time will the market move instantly in your direction. Moves in your direction once in a while, happens. But sometimes there will be fluctuation in the market. The timing of the market can never actually be ascertained. Yes, you can, your analysis might be correct. You might do analysis. The problem with trading in the market is not the analysis. Your analysis can be 100% accurate, but the problem you would encounter is the timing. At what time the analysis begin to play out. So sometimes you need to trade and then give yourself some space, some room, having it at the back of your mind that the timing of your entry may not always be perfect. So place your stop loss and your entries in such a way that it allows room for that shortcoming in your analysis, which is the fact that you cannot always ascertain the right time. You can always get the right points to enter your trade. You can always get the right zone or the right area to be entering the trade. You can also ascertain the direction the market will go. But the time it will start the movement is what you don't know. So you want to place your trade in such a way that your stop loss is placed so that it can accommodate for those shortcomings in your analysis, which is the fact that you do not know the exact time, the movement you are anticipating take place. But while you place your stop loss, you want to also do it reasonably so that the loss or whatever you encounter, your risk is not too much. Yes, we do not advise that you place your stop loss should, be so much. So you want to use wisdom in placing your stop loss, that you are risking something minimal, not so much. Also, at the same time, give room for the market to move, because that is how the market operates. All right. So I think we have a couple of instruments, and then also try to take some of those. I think we can call it a day on this particular class. If you still have any question, you can reach out to any of the instructors in any of the branches, Takot, Lagos, Abuja, chat to us. And also, for those of you within any of our branches, you can always come to the office if you have further clarification on any of the points that have been mentioned. So I want to thank you very much for your time, and see you again some other time. Thank you very much.